This is another podcast from Alpha Business Media. Welcome back to the Deep Dive. This is where we take that fascinating source material you share with us and we really, dig in. We extract the crucial knowledge, connect the dots, and hopefully help you get informed fast. Today, we're exploring a topic from a roadmap study you sent over, awakening what the study actually calls a sleeping giant. We're talking about the insurance market in Nepal.
That's right. And it's a really interesting case. It's a market that the source suggests has immense potential, but it also faces these complex, quite unique challenges, things tied really deeply to Nepal's specific economic situation, its social fabric, its infrastructure, all of it.
Okay, so our mission, our goal for this deep dive seems pretty clear then. Understand where Nepal's insurance market is right now. Explore why it's been, underdeveloped, the fundamental reasons, and then unpack this proposed roadmap. How does the sort actually suggest this sleeping giant can finally be awakened?
Exactly. And the study is quite specific about where the focus needs to lie. It really zeroes in on developing genuinely innovative products, particularly for key sectors like agriculture and cyber risk, and crucially, building up financial literacy and trust across the population. That comes up again and again.
Right. Okay, let's unpack this then. You call it a sleeping giant. The source material calls it that. Where does it currently stand? What are the numbers telling us?
Well, the core message really is low penetration compared to its potential. There's data cited from the Nepal Insurance Authority from around mid-May 2025. It shows overall insurance coverage reaching about 47% of the population.
Okay, 47%. That sounds reasonably high.
It does initially, but you have to look closer. That figure includes microinsurance and also short-term policies. When you drill down specifically into traditional life insurance, the kind that builds, long-term protection, the penetration rate is significantly lower. It's sitting at only about 16.77%.
Ah, I see. So a big chunk of that 47% isn't the sort of long-term substantial coverage. How does that 16.77% compare regionally? Is there context?
Yeah, the study gives a reference point. It mentions India's overall insurance penetration. Now, this is a different metric. It's based on GDP contribution, was around 4.2% of GDP in 2022-23. So while it's apples and oranges comparing population coverage to GDP share directly, it does suggest that bigger markets in the region see insurance playing a much larger role in the economy. It just highlights how much room for growth Nepal really has, especially in those more traditional higher value product lines.
Okay, so potential is there, but is anything actually happening? Is there momentum? Are things moving in the right direction?
Yes, definitely. The source points to some positive recent trends. In the first 10 months of the current fiscal year, for example, life insurance premiums grew by over 15% year on year. And the total premiums across the whole sector also saw strong growth early in this fiscal year. So yes, penetration is low, but the growth rates are promising. Things are moving.
And what about the players? What does the market itself look like? Who's involved?
So it's structured with quite a few companies. You've got 13 life insurers, 12 non-life, 2 reinsurers, and importantly, 3 specialized microinsurance companies. That's as of mid-2024-25. The study does note some market concentration. Nepal Life Insurance seems to be the leader in the life sector, and Shikar Insurance is pretty prominent in non-life. But the arrival of those dedicated microinsurers is really key. They're specifically designed to reach segments that were previously, unserved.
Right, targeting specific needs and the products themselves. Are they actually meeting what people in Nepal need, or is it just standard stuff?
Right now, it seems it's mostly the traditional offerings. Standard endowment life policies, risk, term life, health, auto, property insurance. However, there's this new insurance regulation, 2081, that's 2025 AD, which sounds significant. It explicitly broadens the classifications. It makes specific room for things like agricultural insurance, livestock, even herbal insurance, alongside clearer definitions for term life and others. And microinsurance is also growing. But here's the gap the study really emphasizes, and it's central to the roadmap idea. Genuinely innovative products. Things like parametric insurance, the kind that pays out based on a trigger event like rainfall levels, not just assessed damage or comprehensive cyber insurance. These are described in the source as virtually non-existent or at a very early stage.
That does seem like a critical missing piece, doesn't it? Especially given the economy, which we'll get to. So how do insurers currently reach people? How does it work on the ground?
The traditional agent network is still dominant, absolutely vital, apparently, for that personal interaction and trust building.
Yeah, that makes sense, especially where literacy might be lower.
Exactly. That face-to-face contact is crucial. Bank assurance, where banks partner up with insurers to sell products, that's also growing. You see banks like Himalayan Bank working with MetLife, Nabel Bank with others. And then there are digital channels. They're emerging, leveraging the increase in mobile connections, which are huge in Nepal, and the exponential growth in digital payments. ECR, Kalti, IME Pay, Phone Pay, QR codes. All that stuff is booming.
Right, so that creates opportunities for InsurTech, technology focused on insurance.
Definitely. That integration is opening doors. However, and this is a big however, in this study, there's a persistent digital divide. These digital channels just aren't universally accessible, particularly when you get outside the main urban centers into rural areas.
Mm.
You also have alternative channels being used, like cooperatives and microfinance institutions, especially for getting microinsurance out to where traditional channels might struggle.
Got it. And who's keeping an eye on all this? What's the regulatory picture like?
That would be the Nepal Insurance Authority, the NIA. They used to be called Bima Samiti. The study points to recent legislative updates, the Insurance Act 2079, various directives. A key shift mentioned is their move towards risk-based supervision, or RBS.
RBFs, what's that involve?
It basically means focusing regulatory effort where the risks are biggest, rather than a one-size-fits-all approach for every company. It's supposed to be more efficient. They're also really emphasizing corporate governance.
What about protecting consumers, building that trust we talked about? Are there specific challenges the regulator is tackling?
Oh, definitely. The source mentions growing complaints about claims, delays, denials, especially after big events like floods, which Nepal is prone to. So the NIA is taking steps. They're planning a specific judicial panel, apparently, to speed up resolving these claims disputes. That seems important. Mis-selling, agents pushing products that aren't suitable, that's also on their radar as a concern they need to address.
And just briefly, the Securities Exchange Board of Nepal, SEBIN, plays this sort of indirect role too by regulating the capital markets where insurers invest all the premium money they collect.
Okay, so piecing this together, we have a market with clear potential. It's showing some growth, but it's starting from a low base, particularly in traditional products. It relies heavily on agents, face-to-face contact, and it's critically lacking those really innovative offerings needed for specific risks, like agriculture or cyber threats.
That sums it up pretty well, yeah.
Right. So now let's dig into the why. Why is it a sleeping giant? What are the fundamental factors holding it back, according to the source? This is where the study really connects the dots between the insurance market and Nepal's broader context. Economically, things look okay on the surface. Forecasts show moderate GDP growth, inflation seems to be stabilizing, monetary policy is cautious, they have enough foreign exchange reserves.
That sounds relatively stable, maybe even boringly stable.
You'd think so. But the source highlights these significant underlying vulnerabilities. There's a large trade deficit, for one, and critically, a very high dependence on remittances, money sent home from Nepalese working abroad. It makes up something like 25% of GDP.
A quarter of the economy. Wow.
Yeah, and that makes the economy really vulnerable to external shocks. Global slowdowns, trade tensions, geopolitical issues, anything that hits those remittances hits Nepal hard. There's even mention of potential Dutch disease effects.
And this vulnerability, this risk, this is precisely why insurance becomes so important.
Exactly. The study argues that insurance is a fundamental risk management mechanism. It's something Nepal needs precisely because of these economic sensitivities. It helps individuals, families, businesses absorb those shocks when they happen.
Makes sense. What about the people, the demographics, social factors?
Well, Nepal has a young population that's usually seen as great long-term potential for life and health insurance products. But engaging young people requires different approaches, more digital savvy. Then there's the urban-rural split. A huge majority, maybe 60, even up to nearly 80%, depending on how you measure, still live in rural areas. And agriculture employs over half the workforce. So massive potential demand for agricultural insurance, right?
Definitely.
But it also highlights the huge logistical challenges of actually reaching these dispersed populations, getting products out there, assessing risk, handling claims. And another key social challenge the study mentions is the brain drain. Skilled people, professionals, migrating abroad.
How does that impact insurance specifically?
It directly affects the availability of crucial technical expertise within Nepal. People like underwriters, actuaries, risk specialists, the kind of people needed to develop and manage sophisticated insurance products. That talent pool is shallower than it needs to be.
And that shortage of skilled labor must tie directly into another massive barrier mentioned, financial literacy.
Absolutely. It's a huge one. The central bank survey cited showing overall financial literacy is only about 58%. And when you look at actual financial knowledge, understanding concepts, it scores particularly low, just 47%.
Less than half.
Less than half. And there are stark differences depending on where people live, their age, education level, gender, big disparities. This low understanding, it directly impacts people's ability to see the value in insurance, to compare complex products, and maybe most importantly, to trust financial institutions. The study is clear. Improving this is basically non-negotiable if you want to build demand.
And culture plays a role too. The source mentioned something about aftermath and trust.
Yeah, it discusses how the cultural emphasis on personal connections, aftermarche, means sort of one's own people, and collectivism influences financial decisions. Trust isn't just given, it has to be built through reliable, personal interactions, which is why those agents are still so important. Positive word of mouth is incredibly powerful there. They also note that the cultural value of saving face can make it hard for customers to give direct negative feedback sometimes. So insurers need to be really proactive in their communication, checking in, making sure things are okay.
Interesting nuance. Okay, finally, technology and infrastructure. We heard about digital payments booming, but what's the full picture there?
So digital penetration is growing fast. Internet usage over 55%, mobile connections way over 100%, and as we said, digital payments through platforms like Isekoa, Kalti are seeing exponential growth. This is creating fertile ground for insurtech and digital distribution channels, no doubt about it. However, that digital divide persists. It's a major theme. Especially between urban centers and rural areas, access just isn't equal. And compounding this is the challenge of Nepal's physical logistics infrastructure, particularly rural roads connectivity. The study points to Nepal's relatively low ranking in things like the World Bank's Logistics Performance Index.
So what does that mean practically for insurance?
It means things like accurately assessing risk in remote farming areas, or monitoring crops for index insurance, or even just physically getting an adjuster to a location to process a property claim. It's really difficult and costly. The infrastructure just isn't always there.
Okay. Wow. So the sleeping giant is sort of held back by this complex web of factors, isn't it? Low awareness and trust, fueled by low literacy, limited reach, especially in rural areas, despite digital growth, challenges with claims and mis-selling that erode confidence, a shortage of skilled local talent, gaps in physical and sometimes digital infrastructure, and these cultural nuances affecting trust building. It's quite a knot to untangle.
It truly is. The potential is clearly there. You can see it. But it's constrained by these really deep-seated, interconnected issues.
Which brings us squarely to the core of the roadmap study then. How do we untangle this? How do we actually awaken the giant? And the study focuses intensely on two key areas, right? You mentioned them earlier.
Exactly. The roadmap really drills down into, one, developing those innovative insurance products Nepal needs, and two, significantly improving financial literacy and consumer confidence. Those are the pillars.
Let's start with the innovative products. Given everything you said about the economy and workforce, agricultural insurance seems absolutely crucial.
Strategically, yes, it's vital. Agriculture is just so central to Nepal's economy and so vulnerable to climate risks, natural disasters. The government does already offer premium subsidies, apparently up to 80% for certain crops, which is a strong starting point.
80% subsidy, that's huge.
It is. But the study notes challenges. Targeting the subsidies effectively, cutting through bureaucracy, and the fact that it only covers a limited range of crops right now. There's room for improvement.
So what types of agricultural products does the source suggest are best suited for Nepal's situation?
It contrasts the traditional approach, multi-peril crop insurance, which covers lots of risks, but is complex and costly, especially for small farms with index or parametric insurance.
Right. The type based on triggers like rainfall?
Exactly. It pays out based on objective data, rainfall levels, temperature readings, maybe area yield indices. The argument is that parametric is potentially much better suited for Nepal's many smallholder farmers, particularly in remote areas. Why? Because it generally has lower administrative costs, payouts can be much faster and more objective, and it requires less complex on-the-ground damage assessment, which, as we discussed, is difficult with poor infrastructure. Livestock and aquaculture insurance are also highlighted as areas with potential.
Okay, but what are the main hurdles for actually implementing these innovative products, and how does the roadmap propose getting over them?
The main challenges identified are lack of reliable data, getting good granular weather data or yield data is tough. Low farmer awareness is another big one, just understanding how these different types of policies work, plus the assessment difficulties in remote areas, even for index triggers sometimes, and the overall cost. The solutions proposed are key. Learn from successful international examples where this has worked. Crucially, leverage technology, things like satellite imaging, drones for monitoring, and integrating with existing agricultural technology platforms like geokrishi, which is mentioned, for data collection, risk assessment, and even reaching farmers.
Using tech to leapfrog some of the physical barriers. Makes sense. So, agricultural innovation is one vital piece. The other you mentioned was cyber risk insurance. Why is that so important now?
Yes, and this seems like a direct response to Nepal's rapid digitalization and, frankly, the increasing threat of cyber attacks globally and locally. The study actually references specific incidents, data breaches at companies like Food Mandu and VNA, attacks impacting banking systems like NEC Asia Bank via the NEPS payment network. As businesses rely more on digital systems, their exposure just skyrockets.
So, what kinds of risks would cyber insurance actually cover for a business in Nepal?
Well, the products could cover a range of things. Costs related to liability if customer data is breached, losses from business interruption if systems go down after an attack, costs for data recovery, paying for expert incident response teams, maybe even covering cyber extortion demands in some cases.
Seems essential for a digital economy. What are the challenges in getting this market going?
Again, data is a big one. Insufficient data on past cyber incidents in Nepal makes it really hard for insurers to accurately price the risk. There's also apparently low awareness among many businesses about the severity of the threat, or that insurance is even an option. The potential cost of coverage could be high initially. And, tying back to the brain drain issue, there's a significant shortage of local specialists in cybersecurity and cyber underwriting.
So, how does the roadmap suggest tackling these specific cyber insurance challenges?
It really calls for strong collaboration between insurers, IT security firms, and the regulators. Proposed solutions include things like creating shared databases of cyber incidents anonymized, of course, to help with pricing risk, developing clear industry standards for cybersecurity that businesses need to meet, launching awareness campaigns specifically targeting businesses, and potentially exploring government support or incentives to kind of kickstart the market.
Okay, two crucial product areas. Now, shifting to that second core focus area, financial literacy and building trust. We established literacy is low, but how does the roadmap actually propose fixing that? It sounds like a huge undertaking.
It is huge. And given the low rate, remember, 58% overall literacy, only 47% actual knowledge, the study emphasizes it needs a comprehensive multi-level approach, not just one thing. It needs involvement from multiple government ministries and agencies, the Central Bank, NRB, Ministry of Finance, Ministry of Education, the NIA itself. Key actions suggested include integrating basic finance and insurance concepts right into school and university curricula. Start young, using mass media, TV, radio, online platforms, social media, but with content that's accessible, easily understood, and culturally relevant, not just jargon. Insurers and their agents also have a direct responsibility, the study says, to actively educate their clients, not just sell products, and importantly, leveraging NGOs and community groups to reach those who are often hardest to access people in rural areas, women, those with less formal education.
A real nationwide effort. And what about trust? The source called it the cornerstone. How do you build that, especially if there have been issues with claims?
Yeah, building trust is framed as absolutely critical. The strategies suggested include increasing transparency from the insurers themselves. The NIA publishing monthly data is seen as a good start. Simplifying products and contracts is essential, making them easier to understand. The NIA is apparently working on unifying guidelines here, improving basic customer service prompt responses, professionalism, easy interaction, that's vital too. But the single most impactful factor for trust, according to the source, seems to be effective and fair claims settlement.
Makes sense. If you can't rely on getting paid when something goes wrong, why buy insurance?
Exactly. Delays and unfair denials severely damage the reputation of the entire industry. The NIA's planned judicial panel to speed things up is one step, but companies also need to improve their own internal processes. And combating mis-selling through tighter controls, better agent training, and ensuring customers fully understand what they're buying is also key to building that long-term trust. Plus, the regulator, the NIA, needs to be seen as effective in handling complaints when they do arise.
So beyond these two core pillars, innovative products and literacy trust, what other regulatory and policy recommendations does the roadmap make? How should the rules support this awakening?
The source argues that regulation shouldn't just police the market, it should actively support its development. Key suggestions include continuing that move towards risk-based supervision we talked about, simplifying the licensing processes, especially for innovative products or new insurtech companies wanting to enter the market. Establishing a regulatory sandbox is mentioned basically, a safe space to test new insurance ideas and technologies under lighter regulation initially, and improving data protection and cybersecurity laws that are relevant to the sector. plus adapting regulations specifically for digital channels and online sales.
What about the government's role beyond just regulation? Any mention of direct support?
Yes, speed, support, and incentives are seen as important catalysts. Things like improving and expanding that agricultural subsidy program, better targeting, maybe covering more crops. Considering tax incentives for certain socially beneficial insurance products like life, pension, health insurance, maybe even for businesses taking up cyber insurance. And supporting the development of infrastructure needed for data collection, better meteorological data networks for parametric insurance, maybe helping set up systems to collect cyber incident data, possibly through public-private partnerships.
And coming back to that talent shortage, the brain drain issue, how does the roadmap suggest addressing that?
It suggests a focus on human resources, things like structured training and certification programs for insurance professionals, strengthening cooperation between universities and the industry to create relevant courses, and efforts by insurers themselves to attract and retain qualified staff, better salaries, career paths to help counter the pull of working abroad. Improving the overall investment climate is also mentioned stability, simplifying procedures for foreign investors as that can help bring in external expertise and capital.
And finally, getting the word out, reaching customers effectively.
The roadmap touches on marketing and distribution strategies, needing specific tailoring for Nepal. Communication should use local languages, relatable imagery, focus on themes like family and community protection, which resonate culturally, and leveraging the power of positive word of mouth, which we know is important there. Developing robust digital channels apps, online platforms integrated with those booming digital payment systems is essential for reaching the growing digital population. Agents remain crucial, but they need better training and digital tools to support them. And continuing to explore those alternative channels, bank assurance, cooperatives, MFIs, maybe even partnerships with retailers or mobile operators for simple products to really expand reach, especially into underserved rural areas.
It sounds like the study even lays out a kind of timeline for all this.
Yeah, broadly it suggests phases, like short-term, the next 1-2 years. Focus on foundational work, national awareness campaigns, streamlining basic products, maybe piloting some of these innovative ideas, getting that regulatory sandbox set up. Then medium term, say 3-5 years, scaling up the successful pilots, building out the necessary digital infrastructure, implementing industry standards, strengthening training programs. And then long term, looking 5-10 years out, aiming for significantly higher penetration targets, achieving greater market maturity, and potentially looking at more integration with international insurance markets.
Okay, so bringing this all together, the source paints a really clear, if complex, picture. Nepal's insurance market, definitely a sleeping giant, immense growth potential, but currently constrained by these quite fundamental challenges: low literacy, limited trust, infrastructure gaps, lack of tailored products.
Precisely. But the positive growth trends are there. And the underlying economic vulnerabilities we discussed actually highlight the critical need for insurance as a shock absorber. The demand drivers exist.
And the absolute core keys to unlocking this potential, according to this roadmap study you shared with us.
It really boils down to two things: innovation, especially in those high-need areas like agricultural and cyber insurance, developing products that fit Nepal's reality, and fundamentally, systematically improving financial literacy and building deep-seated trust across the entire population, making people understand it and believe in it.
It sounds like a comprehensive plan.
It is. The roadmap provides a detailed plan, but its success absolutely relies on coordinated efforts from everyone involved: the government, the regulator NIA, the insurance companies themselves, educational institutions, community groups, the public. Consistent long-term implementation is, well, it's non-negotiable if this is going to work.
And it acknowledges that significant hurdles do remain. Infrastructure won't change overnight, the talent gap needs addressing, cultural factors need navigating, but the potential rewards a more resilient national economy, greater individual financial security for Nepalese seem to make the effort worthwhile, if the plan is executed diligently.
The prospects outlined in the source are indeed quite optimistic, provided that roadmap is followed through with commitment.
Which leaves us, and you the listener, with a final thought to consider, building on this deep dive into your source material. Given that complex interplay, we discussed the economic vulnerability, the low literacy levels, the infrastructure challenges. How profoundly could the successful implementation of this detailed roadmap truly transform things? Not just the insurance market, but the actual economic resilience and the day-to-day quality of life for average Nepalese, particularly those in vulnerable sectors like agriculture or those just trying to navigate the opportunities and risks of the growing digital economy. Think about the stability and protection it could genuinely offer. That was a really insightful deep dive, a fascinating look at a market on the cusp of change, all thanks to the source material you shared. So thank you for providing it.
Our pleasure. It's certainly compelling to see such a focused strategy being proposed to unlock potential in what's clearly a vital sector for Nepal's future.
We really do love getting these unique sources from you, our listeners. If there's a topic you're intensely curious about, or some specific source material, a report, an article, a study that you want us to dig into like this, please send it our way. Until next time, keep digging into the knowledge.